Welcome to Nasdaq Trade Talks. I'm your host, Jill Malandrino, global markets reporter at Nasdaq. Joining me at the market site in Times Square, we have Brian Joyce. He's the managing director on Nasdaq's Market Intelligence Desk. With our midday update, we're going to take a look at gold and Bitcoin hitting some key resistance levels here. Before we get into that, Brian, let's just quickly comment on what's happening with the markets today. Just that momentum, you can't stop that train.
Yeah, indices again off to making new highs, so it's good to see. Seeing some, cooling down of tensions over in the Mideast, and there's been a lot of momentum in this market, and it's playing through in the month of January.
All right, let's take a look at our first chart here. This is gold daily, and this is what we took a look at last week, and I believe the week before as well, when you were watching this key resistance level to see if we would get that punch through.
Yeah, so this chart is from 2 weeks ago on the December 26th. We wrote it up on the midday update. It was breaking out from a, let's say, a 6-month, a 4-month resistance line, a declining trend line, and so that was our technical signal right there to go long if you were acting on price action. And so we did see a couple of days of upside follow through here, and we updated it last week with a bit more of a cautionary note because it had reached within a few ticks of that 1557 high, which was the prior high back from August of 2019, a level where we could also expect resistance. But it also coincided with the 61.8% Fibonacci retracement of the 4-year downtrend that took place from 2011 through 2014. That price level was at 1587. So between 1557 to 1587, we expected some resistance to surface itself, which was kind of key because gold's coming off an 18% gain in 2019, its best year since 2010, so a pretty phenomenal year. And if you played like the levered names, like the gold miners, the GDX ETF was up 41% last year. So a lot of people, certainly have gold in their portfolio. A lot of people like to day trade it or swing trade it, and so we thought it was pretty key that even though it looked like it was breaking out and running, we did see some longer-term resistance on the longer-term charts.
All right, I remember you saying that in the near term we could see a little bit of a different action that you would see longer term, which is why if you go to our next chart here, you're looking at the weekly because it gives you a broader view, and this looks a little bit different than the daily. Yeah,
so this stands out because over the last couple of days we had the turmoil with Iran and the United States. We saw a lot of volatile action in the markets, in equities and rates, and also in gold. And so it did spike higher than what we expected to see it, but not on a closing basis. On an intraday high on Tuesday, it got up to 1611, but it closed back down below that 1587 level, roughly 1577. So came within or closed within our resistance range. And if you look at it now, this is a current chart of the weekly period chart, as you noted, and it's currently traded at the low of this week's range, which again, we can see the resistance from the August high right there, and we also know that it coincides with that Fibonacci retracement going back to 2011. So a significant topping candlestick pattern is being made right here along clearly defined resistance, both in the intermediate term as well as long term. On top of that, we see a striking, glaring bearish divergence with momentum. The weekly RSI is making a noticeably lower high. It got up to about 84 in August, September, and right now it topped out about 68 to 70.
Right, so as a technician, clearly one of the most important things you look at is price, but time certainly has to be there as well, because if you just isolate it on the daily, it's a very different scenario than what you're seeing on the weekly, and that can really mess up your risk profile.
Absolutely, so your time frame is key. When you're buying and selling, you want to know what your time frame, you want to define your time period before you take action. And so you can certainly look at longer term charts to come up with, say, expected resistance levels, but when you're acting as a short-term day and swing trader, you also want to keep an eye on what the short-term technicals are telling you as well.
All right, let's move along to our final chart here today. Bitcoin, we're taking a look at this on the daily, also testing key resistance.
Yeah, so it held support at 64.26 to 68.66. That's a big gap price gap that was made back in May of last year in 2019. We identified it twice back in mid-November, and it's tested that level 3 times since we highlighted it. So it did hold support as we had hoped it would. It's now bouncing higher. In the last 4 sessions, as of yesterday's high, it's up 21% off of that support level. But yesterday, on an intraday basis, that's what the move was. But we actually did close back down in red by yesterday's close. And today we're seeing a little bit of downside follow through. So it remains to be seen what it does from here. So what's key is that it had an intraday breakout above the declining resistance line from the June highs, which was about a 54% decline, so pretty significant. In 2019, Bitcoin gained about 95%, but in the first 6 months, it was up about 280%. So after that high in June, it came back about 55%, and so that's a significant pullback. And right now, it's testing that resistance line again, yesterday went above it intraday, but pulled back. It also coincides with the 200-day moving average, which it came within 1% of yesterday. So a cluster of technical resistance there. Now what we want to do is wait and see what it does from here. Can it consolidate sideways and work off the recent overbought conditions? Is up 21% in 4 days. That's a big move. Or is it going to have a big pullback and roll back over and test the lows? If that latter scenario happens, it would make me wonder if the gap support is going to hold and if we see lower lows.
It's interesting. I feel like in 2019 and for the start of 2020, Bitcoin's been a really interesting technical trade.
Yeah, absolutely.
You're able to establish patterns on it now because it's been more range bound than it would have been in 2018.
Yeah, the more Bitcoin, the longer history that it has, the more technical I think it's going to become. And you certainly have a lot of people that are buying and selling Bitcoin on a daily basis, and the more people that are involved, generally speaking, the more technicals seem to work.
All right, good stuff. Thanks so much, Brian, as always. And thank you for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.